In this module on knowing when to buy and sell, I want to give you an overview of what moves currency markets. It's an overview because we will, in subsequent modules, go into far more detail. So at one end of what move markets are the things that you would expect. The whole macro economy, very complicated, very tedious to try and follow, predict, understand, and incredibly specialized and technical. And you'll be very happy to know we do not need to know and understand every single one of these terms to trade and predict the direction of the foreign currency markets. That's the good news. And there isn't actually any bad news. But I thought it's important to let you know, of course, the things that change the exchange rate rather than just say, well, actually, we don't need to know about interest rates and monetary growth and current account balance and monetary policy, fiscal policy, and so on. So the point of showing you this slide is to let you know that all these factors play a part in the movements of the currency markets over a number of months, weeks, maybe even days, maybe even seconds if there's an announcement on interest rates. However, given that we're going to be trading based principally on looking at the price movements themselves, rather than trying to second guess inflation expectations or sentiment or GDP growth forecasts or interest rate movements, our life is made a lot easier. Now, you may ask, well, in that case, why does anybody bother about understanding all these fundamental factors in order to predict the charts? Well, the reason is there are many reasons why people need to be very familiar with interest rates and GDP growth and their forecast on exchange rates. Central bankers need to, governments need to, because they need to know how much their currency reserves are worth. Companies need to. But we are traders, and as traders, we will be aware that these are the background factors which move currencies, but we're going to very, very much focus instead upon the actual movements of the currency price itself, the trends they're moving in, the price momentum, and buy and sell accordingly. In relation to all of this, another way I could put all of this news that you see on screen into more simpler terms is this. Good economy generally tends to mean a high currency. Bad economy and bad economic news tends to mean lower currency value. But again, you'd have to ask me, well, okay, well, what does bad economic news mean? How do we know it's not already in the share price or the price of the currency, rather? Do you mean that the economic growth has slowed down? What about unemployment figures? All these other things. And as I said, we're generally not going to be looking at those moment to moment and trying to second guess. First of all, we don't want a PhD in economics, which is what we'd need to try and forecast along those ways. And we also know there's ways of trading aside from trying to second guess the macroeconomic analysis of central bankers. That's, again, very good news for us. One of the things we may do when we look at trading our own economic news is to look at the price movements. And in this case, what I've shown on screen is something like sterling dollar, the GBP USD. Each one of these bars represents 1 hour and the price moves over the space of an hour. And we might say, when news is about to come out, and in this case, it was GDP news, then we will look to sell, expecting on the price falls, if you see what I mean. And that's one way in which we can trade the news. That works very well for us because, again, we're still focused on the price movements and not upon the news. We're not trying to second guess the news. We're trading in whichever direction the market moves, and what we will do is not try and second guess the news, but follow the trend of the market. That makes life a lot easier for our trading. What the internet has done is has leveled the playing field because there are websites which will offer us free information like this. For instance, what market news comes out, its importance to price movements, so that we don't need to second guess. All we need to know is it's going to have a big impact. Let's look at the price moves, and whichever direction the price moves in, that's the direction we'll trade in and follow. This avoids the need for having a PhD in economics. We're just following the price moves and the price trends. And what we'll do in future modules is therefore very much focus on what we call technical analysis or charting, where prices move, and some of you will already be familiar with this, and we can work out price patterns and therefore directions in which prices are likely to move, so that we can, when we look at price charts like this, we don't need to know GDP figures and forecasts. What we need to know is price patterns. We need to know when the prices move in a certain pattern or hit a certain resistance level, they fall back to certain support levels. And this is what we'll do in modules going forward, but also I'll show you how to read indicators like this, which through a couple of strategies, which will give us price direction for Forex and allow us to profit far more easily and get a far better return on our time, because it's very important we get a return on our time. And not just a return on our money, and that's why we're going to look at trading through these mechanisms, which are a lot simpler, take a lot less time than learning all the macroeconomics on why prices move and when they move and when to buy and when to sell. So in forthcoming modules, when we go through strategies, we'll go into more detail of knowing when to buy and when to sell.